Alrighty, welcome back to Weenie Trades. In this video, I'm going to be doing the September game plan. So I'm going to be breaking down stocks that I find value in, stocks that the community finds value in, and then I'm going to be answering questions at the end. So let's get right into the ETF overview, starting off with SPY. By the way, be sure to use the description for timestamps if you want to skip ahead to a certain stock or topic. So, SPY, S&P 500, we just keep on grinding up higher. We got higher highs and higher lows. So as you can see, we're making higher highs, but we're not getting a lot of follow through. Sometimes that can be a rising wedge where we might have hit our head for the last time, or we could be breaking out. SPY did gap over this flag consolidation and got a breakout, but then went sideways again. So it's a really grinding type of market. So if SPY starts to drop, you know, I'm definitely ready for it. I'm so excited to short some stocks. It's kind of boring lately, just buying stocks and then they just slowly just grind higher. It's like, I want some volatility. I want some action. And that's what can happen when the market starts dropping. Fear starts coming in, people start panicking, we get big ranges, and volatility starts to expand. So SPY, risk to reward is terrible up here. I do expect SPY to probably be higher in the long term, in the long run, but short term, probably just sideways to slightly lower on SPY. On the first extreme dip, I would like to buy the SPY probably in the 445 area and then, take that for a quick bounce. But this time around, I am looking to short or sell the potential lower high. So what does that look like? Well, SPY, if it sells off, I buy the dip. But after that dip potentially bounces, if we start to reject and roll over, I'm going to look to sell the SPY or short the SPY via put options, put debit spreads, bear call credit spreads. There's tons of ways to go short in the market. Can go long volatility a little bit. That's not exactly the best way to go, but it's a potential hedge. But I want to sell the lower high, LH, and put my stop loss just above the highs for the SPY after a potential sell-off into a dip buy. Otherwise, that's a lot of speculation and predictions of what's going to happen. I'm just going to be reacting to the market at Weenie Trades Live. So that's the SPY. Next up, we've got the tech sector, the QQQ ETF, and the Qs broke out. So remember we talked about this ascending triangle. We're making higher lows, higher low, higher low, higher low. We had the flat top. Boy, that was such a great breakout to catch on the Qs, and we put in a higher low and another higher high. So the Qs have already kind of broken out. Last week we talked about, if there's a dip buy, if we could come back into 375, I'd love it. We barely even pulled back. So when we barely pull back and never come back to support, it usually means we could go sideways a little bit longer. What I am starting to watch a little bit is the interest rates. So if I like to check usually like the TLT. The TLT, if the interest rates start to break out, the QQQ could see a little bit of a pullback or a sell-off, and the XLF could get a little bit of a pop. So, you can check out the US 10-year. If this starts to break out of this little pennant pattern, that could be the scenario. But if it breaks down, the QQQ could actually potentially skyrocket, and the XLF could drop like a rock. So keep an eye out on the interest rates. QQQ is still my favorite ETF. So Q's still my favorite ETF for the long term, for the foreseeable future. However, I'm just going to be looking for a dip buy. I'd love to grab the Q's down here at 350. I'd love to grab the Q's if it gets really whacked down here at 343. And why that area? Because look, we hit our heads, we sold off, hit our heads, double top, big sell off. So that's a big area of resistance. We found it's for some resistance initially. We broke above it. Yay! So now if you missed it on the way out, right there, right about 343, you can catch it on the way back in at 343. So that's kind of my idea on the Qs. And if you take a look at my M1 Finance portfolio, the Qs are my heaviest weighting in my portfolio, my longer term portfolio. And that's just to show that I put my money where my mouth is. Again, I'm young, so investing is very important to me. Compound interest is very important to me. If you're a little bit older, maybe invest a little bit less aggressively or even take some profits. But this portfolio just started out, $50 a week. $50 a week for a year and a half, less than that. Hey, I had no idea that it would grow into something like this, and it's super cool. You can see all my holdings over here. Obviously Google has grown into one of my largest holdings, but still bullish the Qs. And these are the stocks that I like long term, and I want to sell these stocks when they become overvalued or the business model isn't what it once was or has that same edge or economic moat that it once had. So that's something to keep an eye out for the Qs. Looking for a pullback. If the pullback doesn't come, we'll reevaluate if the pullback doesn't come and see how I want to invest into the future. But that is the QQQ ETF. Next up, we've got the IWM, the Russell 2000, and these are just the mid-cap stocks. Still range-bound. We have our low points. We have our high points. Boy, this has been in a range for quite a while. I think over 6 months. If we look at the weekly time frame, geez, that is one big bull flag pattern. This is a bullish pattern until and unless we really start closing weeks beneath the lower end portion of the range. So congratulations to anybody that bought the dip buy right at support. I mean, hey, this is in range-bound markets, you sell the tops, buy the bottoms. In trending markets, you buy a little bit higher, looking to sell higher. And in trending markets to the downside, you sell lower and hope to cover and buy at a lower price. So that's just something to think about. IWM, is it going to be a leader or a laggard? If it turns into a leader, it could be a potential thing to rotate into. I'd love to grab the IWM for some longer-term call options if the IWM starts to break out. I mean, if I'm a pattern-based trader and I see this pattern, I'm going to take it 9 out of 10 times. There'd have to be something really wacky for me to not take this breakout on the IWM. Otherwise, and if the IWM starts to really break out, that would be bullish for the overall market, the SPY, the Qs, but it could be a leader. The thing is, we're still range bound until we're not. Above the midpoint of the range gives favor to the bulls even more, and beneath the midpoint of the range gives favor to the bears just a little bit more. So keeping an eye out on the IWM. It's usually a leader, but sometimes it can be a laggard. Next up, we got the VIX, the Volatility and Fear Index. And as you can see, fear is kind of just hanging out near the lows. So there's not a lot of fear or panic in the marketplace. We've still just been making lower highs. High, lower high, lower high, lower high, lower high. We nailed this lower high the last 2 times actually on the VIX, saying, we were expecting a little spike because we've just been accumulating down here for so long. And, we got that spike, but look, we're just putting in yet another lower high. So VIX, I don't see really anything too interesting on the VIX. Volatility is really low. If there is going to be a market sell-off, the VIX is not exactly inversely correlated with the SPY. However, if there's massive fear and panic and there's sharp green or red candles, the VIX is going to be flying high. If we check out the VVIX, the volatility of the volatility index, think of derivatives and calculus class. Basically, they're saying, the volatility of the VIX is really low compared to prior instances. So the volatility on the VIX is low. What that means is option prices might be very lowered relative to usual, meaning we're expecting a little bit, the market has not shown a lot of volatility. What that means is there's potentially some opportunity in buying options when we want to be buyers of options when implied volatility is low. The market's basically saying, there's not a wide range being expected. So if there's not a wide range being expected, but you've been consolidating for a while, well, we know that consolidation is range contraction. Range contraction is usually followed by range expansion. During that range expansion period, that's where buying options makes money. Lately, selling options has been the strategy to make money. So are we going to see that shift? It's interesting to see based off the VIX and the VVIX, the volatility of the VIX. Now we're going to transition into stock breakdowns from the community. So first stock that we have up today is Uber. And Uber, I was asked, hey, are we looking for a bullish breakout? Is there an inverse head and shoulders? Well, if we look at Uber on like the weekly time frame, I'm looking at this cluster right here. So this cluster right here, do we see that? We hit it, we sold off. We hit it, we sold off. Then yay, we broke above it. So if you missed it on the way out, you can always try and catch it on the way back in. The only problem that I have with Uber, and it's the same problem that I have with Zoom, is what's the economic moat? Meaning, is the business easily able to be copied? What kind of protection does it have from it being copied? What is its niche? And I just don't see that with Uber. Again, by the way, Zoom, I do expect Zoom to probably go sideways to slightly lower and probably stabilize down there in the 230s to 200s by the end of the year. But that's besides the point. That's Zoom. On Uber, I'm kind of feeling the same thing as with Zoom. Why didn't we break out on Uber when we had the opportunity to? When you have the opportunity to break out and then you fail, You know, we fail the ascending triangle right there. I mean, you know, that usually means, what's going on with Uber? It's not enough for me to short it. It's not enough for me to buy it. And Uber, you know, even though we're oversold into support, I mean, look at Friday's action. Already put in a tail candle and closed at the low. Usually that means, we might want a little bit more downside. There's a gap to fill on Uber at 35.94. We'll probably be seeing that gap more likely than not at some point, and that could be a potential dip buy, a low risk entry with a stop underneath the lows. However, think of the trend. Think of how many bag holders are in at each of these resistances, and if Uber bounces, it might get sold into because of all these resistances that it created along the way. So breakout on Uber, well, what does that look like? Well, we need to kind of see it break over this resistance. And what's this resistance level? About 42. And what do we need once it breaks 42? We need volume. We need a big breakout on volume. We need a couple million shares traded, and it needs to be kind of over that 42. So we need a breakout in price, and we need a breakout in volume. And ideally, even if the volume is high and we break out over 42 and snap back in, well, that's not yet another reversal. That's a jab, a reversal, whatever you want to call it. But you'd want Uber to break above 42 and hold above 42 and continue. And ideally, on the daily time frame, you'd want the candle to be an engulfing green candle. So you want the candle to be a big, thick bar closing at the highs, and you want that big volume increase, and that could be a potential reversal for Uber. Other than that, though, I just don't see it. Next up, we've got Airbnb, and Airbnb, I like the business model fundamentally. However, based off the stock price, it's really tough to value this stock. Is it overvalued based off its price, or is it undervalued based off its price? If I'm really unsure about that, let's just check out the chart. So Airbnb had a really great breakout over 166. The reason I say that that's the level is this is the area that we've had a lot of trouble with. We hit it, we sold off. We break above it, we hold it as support. Yay, we're holding as support. Oh no, breakdown underneath that 166. That's a sell setup. So an Airbnb definitely dropped right after that sell setup. But we held this kind of double bottom down here at 130. We put in a low, we put in a double bottom, we just put in a higher low, and now we're kind of just we just made a higher high above 160. I think they had a positive news catalyst with potential refugees. But besides that point, Friday was a doji candle, meaning we were pretty indecisive. We made a high of 160 and we made a low of 157. Where are we going to break that doji candle? Generally, if we start to come underneath 157, we could start to sell off and come back down to this 153 support. If that support goes, look for some more support just in front of 150. So that's on the downside. On the upside, Airbnb would be a breakout over Friday's high. If you want early confirmation, it could be over that 160, but generally you'd want to wait for Friday's high to get taken out, which is at 160.57. So you can pay the extra 50 cents for confirmation. Yes, you could buy it sooner and you risk that margin, but you have a higher probability of the trade working out if you wait for that true breakout. And where's the take profit target? Well, I would want to be a seller of Airbnb at 167 because old support is going to be some new strong resistance, and it's a thick red line for a reason. So I'm going to be looking to take profits on Airbnb. If I take that trade, I'm just going to set an alert over Friday's high, and that would be a very logical area to take profits. If it blows past it, great. Well, then I can see if I can catch a dip buy on it if it becomes support on a new breakout. So those are the scenarios for Airbnb based on what I'm seeing. So that's the upside scenario. There's the downside scenario. And of course, there's always a sideways scenario. The market could be sideways for a lot longer than we might think. I hope it isn't, but it's always a potential scenario. So break out, hold the support, move higher, break down, resistance, move lower. Or if we take that short-term trade, watch out for that 167 area as resistance on Airbnb. Next up, we've got JD.com, and JD.com, if we just take a look at the weekly time frame, okay, so this zone comes from this cluster over here. Do we see that? We moved higher, we base out a little bit, yay, we get the breakout. Okay, we broke out, more higher highs and higher lows. Okay, you missed it on the way out, you can catch it on the way back in. Look what happened, you caught it on the way back in. So, in my opinion, JD.com, you're a little bit late if you're buying right now or looking to buy right now, because that was the technical entry, the former breakout area. if we look at the daily time frame, we're cruising on up, higher highs and higher lows. What I'm going to be looking for is where are we holding structure at? I'd like, in terms of the short-term uptrend, JD.com to hold at about 77.50, and watching out for a lot of resistance in this 85 to 86 area if we were to get up there. Also, I'm seeing over here is a lot of nasty gaps. These China stocks have been having quite a few gaps right over here. So, yeah, watch out for 82.15 as the next resistance if China stocks are bullish into the week. So 82.15 on JD.com. And I know I was asked about some potential leap options. We'll go into January 2022. I guess that's not really a leap. That's only like, what, 3 or 4 months away. But option premiums, looks like we're pricing in about a $20 move. So if you think JD can be much higher than $100 a share, then yes, call options might be the way to go. If you're bearish China stocks and you think JD.com will be lower than 60, then yeah, purchasing some put options might be the way to go. Again, you can always sell these options as well. Each option strategy has its inherent risks and rewards. But based off this, spread's a little bit wide, but not too bad. It depends. Do you think JD can move higher or lower than that level? Remember, there's going to be a lot of bag holders on these Chinese stocks, so I don't know if the risk to reward on leap options is the best just yet, unless, of course, you get a pullback and a healthy retracement, and maybe JD.com can hold that 73 area. So that's JD.com. Our next stock to break down is NIO, and NIO, pretty interesting week. Not really, though, because we just kind of sold off, held support, we broke above it. Now we're holding it as, broke above resistance at that 39.50. 39.50 was a really strong area that I'd been hammering for quite a while. Look at this. We got underneath 39.50, 39.50's resistance. We sell off. 39.50, shenanigans wick, sell off. 39.50, sell off. 39.50, are you sick of it yet? Sell off. 39.50, even in the pre-market, sell off. 39.50 during market hours, sell off. Yay! Friday, last Thursday, we broke above 39.50, and we haven't even tested 39.50. So short term, I'd expect NIO to be bullish as long as we're above that 39.50. However, if you've known me for a while, I've been talking about this 43, and this 43 is a really critical level on NIO. If we're beneath 43, overall, I'm still bearish and expecting lower highs and potentially lower lows. If we get above 43, well, now we're starting to potentially press this downtrend lower high pivots, and we could be breaking out. So 43, longer term pivot to watch. 39.50, the shorter term pivot to watch. I know NIO is definitely having some backwind potentially off of Tesla in the EV sector. And Tesla, again, pretty bullish. You know, we got this flat top resistance. We broke out, and we've proved it as support so far on Friday based off this hammer candle. So we've moved higher, bull flag pop, back Tesla support. So Tesla, I'd be leaning more bearish on, or more bullish on that. So expecting Tesla to move higher, given that market conditions are the same. Again, if the QQQs are absolutely dumping, Tesla's not going to break out. NIO's likely not going to break out if China stocks like BABA continue to sell off, which BABA, by the way, might have put in a low. We talked about it live on the live stream as BABA was curling higher. I was like, if we put in a hammer candle, that could be a capitulation type of low with a reversal and closing at the high. The next day we gap up. We held a higher low or double bottom, but now we just hit resistance on BABA. Can we get over this resistance of 178? If we quickly check out BIDU, same thing. Inverse head and shoulders potentially. Left shoulder, head, right shoulder. You really have to squint to really get that, but we could get the breakout. But again, though, lots of these China stocks, lots of resistance overhead. So calling a low, it's not really productive, but it's something to just be interested in, because the reason I'm calling a low is we're so oversold from the highs. This is some short-term, potentially short-term problems. And if we look at the higher time frames, we're coming into some pretty strong support. So that is NIO, Tesla, and China stocks all in one. Next up, we've got Bitcoin, and Bitcoin has been beasting lately. We've just been making higher highs and higher lows, bull flag, popping on up. Nice, good stuff for the crypto bulls, and I'm one of them. You know, I have Bitcoin, Cardano. a little bit of Ethereum, Polygon. So if you just want to take a look at my Coinbase portfolio, just adding steadily just a little bit. I have not been adding recently as we're starting to hit some resistances though in the overall Bitcoin market. So, in the crypto market at least. So look, these are our zones over here and we're just reaching the top end of the zone and we've got a doji candle. Where was the potential buy points that you could have bought Bitcoin? Well, right about here over this breakout, and then over that breakout. Well, I don't see an edge buying Bitcoin, at least in the short term. Sure, of course, long term, I'm a bull. So who cares if I'm buying it for 51K and buying it at 55K? If in, half a decade or a decade, I expect Bitcoin to be 100K or higher, at least based on what I know right now. Again, my research is constantly dynamic as the market is constantly dynamic. So Bitcoin, the short term probably needs to go sideways or pull back just a little bit. Again, I'd love to potentially buy the dip on Bitcoin now at about 46K. And that's this prior zone over here. Or I'd also love to buy Bitcoin at about 42K. I would not want to see Bitcoin coming down into the 35K zone again. That would be a pretty bearish. We've already spent a lot of time there. We wouldn't want to come all the way back in there after making such a good run so far. So Bitcoin, cryptos, kind of on fire. Just quickly, briefly touch on something like Mara, hitting resistance, tail candle on Friday. Look for that to go sideways to slightly lower. And we're extended into resistance. If we check out something like Riot over here, Riot looks even more bearish than Mara. Mara doesn't look bearish, by the way. Riot looks more bearish relative to Mara because look, we're already starting to roll over, and that's just not the best sign in terms of the miners. So Bitcoin, bullish long term, short term, sideways to slightly lower. If we quick check out Coinbase, Coin looks a little bit more constructive now. Now we're at least putting in consistent higher lows. And I love consistency. We got a low, higher low, barely a higher low, higher low, higher low, higher low. We still got this nasty area to deal with right here at about 280. So Coinbase bullish above 280 and can continue higher. Otherwise, underneath 260. More sideways action and zigzags to slightly lower. So that's just my quick analysis on crypto and Coinbase and Riot and Mara. Next up, we got the meme stock GME. And if you recall last week GME was in the game plan to take the breakout trade. Well, the breakout trade worked out. However, it didn't get much follow through. And that's why anticipating the breakout with a smaller position size and then adding as the breakout occurs, now I've got my full position. We break out. I get a chance to take off half profits and let the other half ride. Well, the other half just stopped out, break even. So still getting some good money off of that GameStop breakout, but we snap back in. And why did we snap back in? Well, because GameStop probably isn't a $200 stock. And remember, we need actual investors and buyers to buy it at this price, hoping for probably a squeeze, which already happened multiple times. So that's just something to think about on GameStop. Long term, I do expect GameStop, I would be very surprised if we're above $100 a share next year. Anything can happen. We'll see what this next earnings report is. It seems like every other store and place is open besides GameStop. It's like, why are my GameStop stores closed? A little bit weird, but that's just some small anecdotal evidence that really doesn't have an impact in the marketplace. But GameStop, I'd expect GameStop to zigzag and go sideways to slightly lower. If it gets any squeezes, I do think now's the time to potentially sell, bear call credit spreads, BCC. That means I'm like going to maybe sell something like a 220 strike call. And then, so that's a -1, and then buy to protect because I never want to be short a naked call. What if GameStop does squeeze? Maybe I buy something like the 225 strike call. And then what I would do is I'd collect a credit. And as long as GameStop is beneath the call that I'm selling, potentially the 220 strike call, then I make good money. So GME, sideways to slightly lower. That is a false breakout. That's a potential short setup. So that's GME. AMC looks a little bit more constructive. We made that. We had the squeeze. Nice. Congrats to the bulls that caught the squeeze. I was one of them. And, didn't have to be in it from the lows. Just have to catch it as it's breaking out. Manage risk on the way up. And then take profits when it gets absolutely ridiculous when a stock is that high. So high, We put in a lower high. Now we made a lower low. Lower high, double bottom, higher low, higher high, higher low, lower high. So now we're in an equilibrium. So we have our high, low, lower high, higher low. We'd expect a lower high somewhere underneath, 40, 46. But AMC does look more constructive because we're still holding these higher lows. And Thursday and Friday last week held up pretty strong. So AMC bullish over 45. We probably have room up to that 48, potentially all the way up to 50. Again, though, I would be very surprised if AMC is holding above 50 in the future. So that is a less likely scenario. Again, AMC, probably a $20 or less stock, unless, of course, the movie theater industry starts really, really booming. Next up, we've got Blackberry, and Blackberry, I think it caught an upgrade recently. We hit this consolidation zone right here. We've just been sideways, above 9, but just beneath 11. And we finally broke out over that, 11, call it like 1060, and we hit that supply zone and sold off. We did it again and sold off. But can Blackberry put in a higher low? I don't know. Had a pretty ugly day Friday, so Blackberry, I wouldn't be interested at all in this stock. But if you really want some key levels, you'd want it to hold this previous breakout area. Call it 1075. As long as Blackberry's above 1075, sure, it can continue its uptrend and move a little bit higher. But I'd still be neutral as long as we're beneath 11.60. So a little bit more bullish if we get above that 1160. A little bit more bearish if we get beneath that 1060. So Blackberry, not the best opportunities in this stock in my personal opinion, but that's just something to watch out for. Similarly, there's Clov, C-L-O-V, big parabolic run, sell off. Same with Blackberry. Lower high, higher low, lower high, bear break. This is an EQ that broke bear. So keep an eye out. This could potentially happen to AMC later this week or later this month, whether to be to the bull side or to the bear side. But CLOV, again, consolidation zone, low points 8, high points 8.69. Very tight range. We move higher. We sell off right into that supply zone, 9.45. Looks like Friday had a pretty big rip higher and then just a failure. So that's a really strong rejection. That's usually a little bit more bearish than it is bullish. However, we did get pretty oversold. And so as long as we can hold above this 879 area, then sure, a Clove could move higher. Is it the best opportunity? No, not in my personal opinion. I'd be bearish on Clove underneath Friday's low, 8.60. So that is Blackberry and Clove. Next up, we've got Google, and Google has been my favorite stock in 2021. And you can probably see why. Higher highs and higher lows, they're making a ton of money. It's part of the tech sector, one of my favorite tech stocks. Google, YouTube, amazing stuff going on. However, we're a little bit up there. So we're still making higher highs and higher lows. And if you recall on Friday was a great trading day. I said I was looking for the dip buy on Google. Boom, we grab that dip buy and take profits right off at about 28.70. So Google, again, we'll remember those interest rates. If the interest rates break out to the upside, Google might get clapped. Google potentially has some negative news catalysts dealing with antitrust, and that's just because they're so big. I do trust Google with my privacy and personal data, but, anything can happen. It's always potentially sketchy stuff and business practices that could be going on, but that's besides the point. Google, not exactly a trading stock. Me personally, from now on, because of the spreads and the poor liquidity on Google, just to get into an option contract, you're going to, on the tighter spread stuff, you're going to have to pay potentially $100 to $150 to get in, $100 to $150 to get out. And that just kills a lot of profitability on these option contracts and spreads, even on the shares. The shares have such wide spreads. So Google, with that being said, I'm just going to be investing equity into Google from now on until we get the stock split. So we're going to talk about Nvidia in a bit. But once Google gets a stock split, I'd hope it does like something like a 10-for-1 and becomes 10 times cheaper. And it has a lot more shares out there to be able to trade. And what that'll do is that'll tighten up the liquidity. The bid-ask spreads will be tighter, and I'm not going to lose a ton of money to slippage trying to trade Google. So Google, in my opinion, it's an investing stock. None of this is financial advice. I'm not telling you to buy Google or sell Google. I'm just analyzing Google based off these higher low trends, higher lows, and higher highs. And it seems like every single dip is just constantly being bought. What do they know that we don't know? I don't know. But Google, an investing stock, not a trading stock, until we get that potential stock split. Nvidia has been an amazing stock lately. As you can see, we've just been breaking out into new all-time highs. The chip shortage, Nvidia is killing it. It's the leader in its industry. Nvidia pays a great dividend, and it's just a great stock overall fundamentally, and a great stock technically. Apparently, it's like trying to get like drugs on the street, selling Nvidia chips on the street. But that's what I've heard. Apparently, there's some really high demand for their chips, and the software and technology is just the best. But look at this resistance we had over here, over 210. Hit it, we sell off. Hit it, we sell off. Oh yeah, we put in a higher low, and now we started to break out on Nvidia. We broke out, consolidated just a little bit, and because we didn't consolidate a long time, we had a breakout, but it was a little bit weaker. We broke out. If you missed on the way out, you can catch on the way back in. And they gave you 3 chances to buy it on the way back in. And Friday, Nvidia just loves ripping on Fridays. So Nvidia looks bullish, looks like it can continue and make new all-time highs. But again, we got to be weary of the tech sector, the Qs, the SPY. Generally, when you've gotten that much time to accumulate at the former breakout area, it'd be really weird if Nvidia just went rocket ship from here. So risk to reward, again, not the best on Nvidia. However, it is likely to potentially eclipse those all-time highs. So I'm going to set an alert over those all-time highs, and I just might be taking it as a day trade, but not a swing trade. Again, for me to want to swing trade Nvidia, I'd want to buy it at the previous most tested breakout area. And that would be at about 207 on Nvidia. Love to grab Nvidia at 207. We'd need a little bit of a market pullback for that to occur. But Nvidia, bullish. If we do break out early in the week, just be aware that because we had so many opportunities to buy it, it could break out and snap right back in. So false breakouts, that's what 2021 is all about in the market. We're breaking out and then snapping back in. Breaking out, snapping back in. So keep an eye out on Nvidia. Bullish on the stock long term. Nvidia's in one of my holdings in my long-term portfolio. So I like the stock. Would just like to get it a little bit better of a deal, if you ask me. Going into stocks that I'm watching this week, I'm watching Sony. And Sony is starting to approach all-time highs. If we look at the weekly chart, we've got these series of lower highs that we just broke this last week. You know, we got a high, a lower low. Okay, we're looking for a potential wedge because we've got higher lows over here. Look at that. We got the triangle pattern. High, low, lower high, higher low. Potential bull break just occurred. And off of that bull break, I am swing trading this Sony 120 strike call. And basically what this is basically I'm saying, hey, Sony, if you can break out and continue into all-time highs, I can get a really good risk to reward and return on my money. As you can see, the trade is already up 45%. And it's only just been like 3 or 4 days. So Sony, definitely kicking. It's a little bit slower volatility, meaning it's not super volatile in terms of the shares. So that's why I feel comfortable with option contracts. But shares I do think are pretty good. Sony pays a good dividend. And if Sony could pull back into its former breakout area, 105.66, I would like to add one more time with a stop loss underneath that pivot. And just looking on Sony, potentially might take some profits into the 113s, 112s area on Sony. Just take half off and then leave the other half for a potential break-even stop loss or for new all-time highs on Sony. So that's one of my picks. I'm also still watching out on Square. We've kind of got a binary event going on. So Square broke out, made new all-time highs in 2021, snapped right back in. Ideally, I would have liked Square to have held on top of the all-time highs up there so that it could consolidate a little bit and then break out even better. However, market conditions, whatever it may be, Square pulled back. Square's a little bit more volatile than other stocks, much more volatile than Sony stock. And Square is kind of like a higher risk, higher reward. So keeping that in mind, the capital allocation for Square, I like it. I pick Square over any of the bank stocks any day. But that's just my opinion. Square could be fundamentally overvalued and then get clapped. However, that's based off old metrics. Based off new metrics, I do think Square is the future, and we could see a breakout. And so watching these key levels on Square. If Square's coming above, well, let's call it 276, I'm extremely bullish and would love to add to square. So I'm going to set an alert right over there. And if square is coming underneath 260, I would be a little bit bearish in the short to medium term. And I might short square or just reel back on some of my long positions. So that is square. And then lastly, let's check out SPCE. SPCE, not my favorite trade setup, but interesting to see that we moved higher, put in a consolidation, broke down, sell setup. Broke down, we did a bear flag. I had a little scenario right here. If we held above the bear flag and continued, that would be okay for SPC, but SPC broke out of the bear flag and could not hold it as support. That is bearish. We dropped, put in a bear flag, similar thing. Broke out, could not hold it as support. SPC is a sell setup underneath Friday's low, underneath 2361. And on that sell setup, general target would be something like the gap down here at 2113. So not the best setup, but just something to potentially watch out for. Lastly, I've got a few questions I want to cover. And so somebody asked me, hey, I'm a beginner day trader. What should I be looking forward to in actually swing trading? Because day trading, you need PDT to be above PDT, above that $25,000 threshold. Otherwise, cash account with 3K apparently is this scenario. And I just want to talk about why I think swing trading is the best route for most people. And the reason for that is slippage. So when you're day trading, you're incurring a lot more slippage. And what does that mean? You're just really paying a lot of the spreads. You're paying every time you jump in, every time you jump out. When we're swing trading, we can ride longer trends. We can take a smaller position. We can have a wide stop loss. We can have a wide take profit. And you can still make a decent amount of money because we're being very capital efficient. So what I like to do in terms of capital efficiency is you need a margin account to do this, but I do like debit and credit spreads. And they're defined risk trades. They're very capital efficient and the risk is built into the trade. So you don't really have to worry about stop losses or anything of the sort as long as you just adjust your position size. So beginners, day trading is really something that, especially in this type of market environment, I don't think is the most profitable. If we're chopping around, you're not able to get a lot of wide intraday range. And if you're taking more trades and more frequent trades, because that's usually what comes with day trading, you're going to incur that slippage. You're going to be, it's a little bit more stressful because you're dealing with bigger numbers on shorter time frames. And you might get wicked out and stopped out a lot more than if you are to ride the longer term trend. So swing trading, definitely I would suggest over day trading for the majority of people. I also want to address why I want to close debit spreads early. I like closing my debit spreads early because I don't like getting assigned. Because sometimes when you're in a debit spread and your +1, the call that you're buying, expires in the money. So let's say you had like the 21 strike call on charge point. Well, now if you did not close that debit spread, and let's say you're short, let's say you're selling the 23 strike call, and that's a debit spread. We're +1 on the 21 strike call and we're -1 on the 23 strike call. Well, if charge point closes right at 22, well, you're going to get exercised on your +1, your long call, because 22, it's above 21. And you're going to buy 100 shares at 21. And that's going to use $2,100 of capital. Well, what's great about that, at least, is the 23 strike call expired worthless. It expired out of the money. So you got to collect all of that premium up there. So generally, I like to close it early because then it doesn't use up that capital, that buying power of $2,100. And you're not having that over the long weekend type of risk. So always closing out the debit spreads at least an hour before expiration. But generally, I like to sell my debit spreads on expiration day, especially when I get a push right in my favor. If it goes against me, I like to give it just a little bit more wiggle room and then let it pivot and then put my stop loss right beneath that low, or at least set an alert underneath that low, and I can close that debit spread out naturally. So hopefully you guys enjoyed that review on why I want to close out debit spreads early. Oh boy, these game plans are getting a little bit longer. Let me know if you enjoyed the video by hitting the like button, share with your friends, We covered a lot of stocks today. Surely some of those stocks can potentially benefit them, whether it be for the short term, the medium term, or the long term. But if you enjoyed the free content and analysis, the best way to support the channel is to check out the course. It's a great investment in yourself. It's a great investment in Weenie Trades. I have a free 30-day money-back guarantee. I think it's really good. I spent a lot of my blood, sweat, and tears into the course. I made the course because people asked me to make the course, and I'm really happy that I did. So be sure to check it out if you enjoyed the analysis. If not, keep enjoying the free content that we put out nearly every day, and be sure to tune in to Weenie Trades Live. Alrighty, thanks for tuning in. See ya.